This is CMA Part 1, and in CMA Part 1 we have 10 lectures, and these 10 lectures consist of 4 lectures of cost accounting, 2 lectures of auditing, 2 lectures of performance management, and 2 of budgeting. This is how it goes. Today we are going to discuss the cost accounting portion. We'll discuss cost allocation techniques. Broadly, these methods we'll discuss today: absorption and variable costing, and what is the concept and what are the calculations required for your examination. Joint product and byproduct. Again, what is the concept of joint product and what is the calculation part. Then we'll see overhead allocation and normal costing. And in the last, we'll discuss the allocating service department cost. Let me give you some idea how it looks like. Absorption, when we use word absorption, means fixed cost plus variable cost. The other name of absorption is full cost, total cost. So means that we always, when we calculate cost, we consider fixed cost, we consider the variable cost as absorption. The other is variable, as only cost has 2 components, 2 behavior, one is fixed and one is variable. So what we do is, if we take only variable, it becomes variable costing. But if we take fixed plus variable together, it becomes the absorption, full and total costing. Example is that suppose your car is out of order and you need to go anywhere very urgently, right? So you call your friend and ask for his car, and he says, okay, take this car, you are my friend, but as much you drive, just put the fuel in. There are 2 types of overheads. One is manufacturing and one is non-manufacturing. Selling and admin is non-manufacturing overhead, right? We cannot say when I sell this one, $1 is the selling cost, right? Selling cost is indirect. It depends like how much unit I will sell. At the end of the year, I can tell you name of the cost. One is manufacturing cost, which is DM, direct material, direct labor, and manufacturing overhead, right? Then we have, if you use word manufacturing cost, it includes only manufacturing overheads, like the factory rent, all that is factory related to manufacturing. Anything related to manufacturing is manufacturing overheads. But if you say what is, I'm talking about total cost. When I say it has a cost, so it can be 2 meanings. One is manufacturing cost and one is total cost. When I say total cost is DM, DL, manufacturing overheads plus non-manufacturing overhead like selling and administrative. Then it becomes a total cost, right? So again, the examiner will play a cheeky part with you. He will ask, calculate cost of goods sold, and he will give you variable selling and admin expenses. That time you should know that manufacturing expenses does not include the selling and administrative. But same question he can change, calculate total cost. Then whatever cost has happened, you have to accumulate and make a total cost, right? Lot of questions you will see. Knowledge is required, first of all, in a sense that you should have ability to identify this is manufacturing cost and non-manufacturing cost. The other knowledge is required, the concept of absorption and variable. When he says use absorption, add fixed and variable. When he says variable, take only variable, right? When he says calculate total cost, by using this method, first calculate cost. Then if he says that calculate cost per unit, so first calculate the cost, divide by the unit, you will get per unit. There is no much beyond than that. It is all in the circle of what I told you just now, right? Okay, let's start. First of all, there are 2 concepts. One is product cost and one is period cost. Product cost is that is directly identifiable in the product. By like for example, this LED, we can see screen and this all plastic, whatever, it is DM. someone fixed a DL, and there are some variable manufacturing expenses related to. So if I calculate product cost by using variable costing, I can take DM, DL and only variable manufacturing, because we are using a concept of cost accumulation of variable cost. Opposite to that, if we use absorption, we have to take the fixed cost also, because by definition absorption means fixed plus variable. So this is related to manufacturing. Other than manufacturing are variable, selling and admin, and fixed. These will be the period cost. We will allocate for a period of time. That's why we make income statement. We write income statement for the year ended. So we put rent, all that. That is for a year. We paid rent for a period of time. So this is period cost. But for variable, because you didn't took this fixed before in products, so that will be all is period cost. Difference between both is cost will also change. So they will adjust themselves, right? And impact on fixed cost will be emphasized. So you can see this is my fixed cost. If you are not satisfied, suppose all owners of a factory wants 24 hours machine should work, because they paid money for the machine. 24 hours if they work, then per unit cost will be less, because you will produce more, right? This is the bottom line. Everyone wants to use it for 24 hours, right? Okay, let's ahead. Like we have joint cost. Joint cost is the cost incurred up to the point. What we did is we divide straight away on the unit method. In fact, some unit can be expensive. So idea is expensive unit should have more cost, right? So what we did is, then it's a market-based approach. He give us same way the units and the sale value, right? So we can know that this can be sold in 18,000, 15. So 54 is the most, should consume more value, because logic says that the expensive item will have expensive cost. If it says sale value, for sale value we should have unit into sales. When it says NRV, we should have sale value, then we have to have the expenses to make it sellable. First we will calculate NRV, then same way individual divided by total into the common. Now he says constant gross margin percentage. He want to tell you that if you calculate, for example, he want same gross profit from selling A, F, D. The method name is constant gross margin percentage NRV method. If you remove NRV, I will not deduct 7,000 from it, right? But it's a method like this, right? So calculate gross profit margins, multiply with each. So you will get a reduced figure. You will get a reduced figure. And then because this is NRV, you have to subtract the same expenses to make it, and it will give you a reconciliation that your common cost 100,000 has been allocated accurately. This is not required, but here it is. Okay, this is the revised figures. If you do in this way, it will give you a constant gross margin of 26.21%. Let's talk about byproduct. What is byproduct? For machines, means how many times you produce, they will put it into that one. Machine hour is for the machining cost. Any machine hours will work, only management can decide, because this is very critical. If they decide bad way, the individual department cost will, I will solve another question of the past papers that will make your life more simple. Now let's discuss the distortion. Distortion in financial statement. What is the concept? Because it will happen after 1 year, right? So when we make budget, we use extended normal costing. When we want to balance the figures, we use normal costing, and all accountants generally they use actual costing. Okay, if you produce one item and all items are similar, right? So you can use one predetermined rate, that is called single plant wide rate. One rate for, suppose we make one series of product line which is similar, so nothing to worry. But sometimes you make chocolate, sometimes you make juice, sometimes you make other things. Like Nestle is making 100 of products, so they cannot use one predetermined rate. They will use some to the other service center, and production we have to do it in any case, right? How we get 8,000? This will be given in the question, that this much of that we have to allocate, right? This is now this is one step, because previously it was 120, now it become 28, because that cost also be part of. Next allocation is simple, take 120 because only production departments are left, so divide on the production.